All right, today on Road to Funded, I guess you could say. It was a good day. Yeah. All right, let me show you what is the trade that I took. Let's market open. There we go. And okay, that's interesting. Anyways, yeah. So, what did I do? What I do is I usually market open, and this is my little kill zone, and I like to cap myself off at this time. Basically, I'm looking for my golden trades within that range, and if I tend to not find anything given slow price action and anything, I have given myself this range to actually operate in for a day. And it seems to be working with me. It's not based on like any algorithm or any other like optimal time bullshit. It was just what works for me based on my data collection and trade history. This is what works for me. So if we go on the 1 hour, we see this. We have not swept any liquidity today, except pre-market. I mean, this counts. We swept this, and we were operating within an hourly imbalance. So now that I see both of these, so the hourly imbalance gets respected and we get a sweep to the buy side. Then we can scroll down into the 5 minute. Now, in the 5 minute, what am I looking for? I'm looking for executionable price ranges. So what do I need? I need confirmation first of all. What do I see? Right after market open, boom, look at us, break of structure. After that break of structure, we get a fair value gap. That fair value gap doesn't get entered into, we don't care about it. And then, other than that fair value gap, we also have EQ. What we see with EQ is it does get revisited. So now, feeling a bit more confident, I go into the 1 minute. Now, based on this EQ, I am seeing opportunities. Like, this would have been a great entry right here, right there, because as you can see, price is not breaking structures to the upside. We actually break structures to the downside right there on the fair value gap, and then boom, revisit. We could have put our entry there and stops at this high or this high or even this high. I would probably go for this high or this high. I would go for this high. And then you could take profit in the middle of this fair value gap or at the bottom of the hourly fair value gap. And as you can see, consequently, it would both hit. Now, this would have been a great trade. I did not take this trade though. What did I take instead? Now, after I'd missed this, and I'd noticed that I'd missed this, I just watched price play out. I let it go down. Look at these breakaway gaps just not getting touched whatsoever. So I knew I would just have to be patient and just wait. Just waiting. And then this huge fair value gap forms. And I say, okay, maybe an opportunity will present here. And then boom, we come up. We don't break structure, so we're still bearish. And also I've got my confirmation if I ever needed one. There we go, break structure to the downside again if you would really like to mark it out. And then retrace, entry, stop at the top or at the midpoint of this FVG, actually, just because the recent high is there. I would feel comfortable doing it because my trade idea would be invalidated if I push past the high. And if we go to the hourly, I had my final take profit there. But then if you go down here, you can see that it didn't go to my final take profit. So where did I have my other one? I actually used these liquidity lows. This one and this one. And what did price do? It hit this one. And since I was only in for one contract, I took it out because I saw a reversal coming. And it could have just been luck, you know, because I just ended up marking that low instead of another one that was right next to it. And it worked out for me. And that's how it went. And then when it retraced all the way back up again, I did forward test another trade and marked this one out here. Same thing, midpoint of FVG was my stop loss, and I put this as my TP. So I'm technically still in this trade, but I'm just forward testing because according to my trading plan, I am done for the day. All right. Thank you for watching.